Hello again. Today is our fourth lesson, and we'll be covering topics such as fundamental analysis, how to properly read the news, and we'll definitely talk about different types and styles of trading. We'll find out what scalping, day trading, investing, and many other things are. As we know from economics textbooks, investments are divided into short-term, medium-term, and long-term. The diversity of approaches and interests determines a certain behavior model in the market. It just so happens that all these models have appeared in our company, and we'll try to break them down together. Day trading. This style involves trading within the same day. Decisions are made based on technical analysis and tape reading. On average, traders make 5 to 7 trades within a single session and do not carry positions overnight. Intraday leverage allows you to turn over quite substantial amounts. And when risk management is followed, it opens up very solid opportunities. I guess I am a classic representative of this school. My day trading course partner, Tolia Radchenko, does a great job of complementing the described method with his unique perspective on news reading. But more on that a bit later. Scalping is an approach that probably requires a bit more intensive work. Scalpers, that's what these traders are called in our circles, make a fantastic number of trades. They're almost always trading something. The focus here is on correlations and a deeper understanding of market infrastructure. Swing trading involves holding positions for a bit longer, often leaving them open overnight. Swing trading is almost always about technical analysis combined with the market. There's a pretty clear trend where both scalpers and day traders sort of shift toward this style of trading, reducing the frequency of their trades. I'll admit, I don't follow this trend myself, and I don't really have much desire to. Investing. Of course, here we're not talking about investing in luxury goods or real estate, but specifically about buying stocks. Basically, by investing money in stocks, you get a business that you truly understand. These could be, say, Tesla shares, or if you believe in future technologies, you can absolutely buy them for the long term. If you're more interested in building a long-term portfolio and receiving dividends, there are also great opportunities here. A huge number of global companies pay good dividends every year. And let's be honest, earning returns in dollars, the most stable currency in the world, is very appealing. So even at the stage of opening an account, you need to clearly understand the goals you are setting for yourself. Speculation is one thing. Preserving your capital and growing it with a fixed return is something completely different. Now let's talk about what fundamental analysis actually is. And it will be much more convenient if we break it down into several sections. The first section is fundamental news. Of course, if you plan to trade, say, within the day, and at first glance, things like GDP or consumer spending shouldn't concern us, it's not that simple. Market volumes and volatility largely depend on global sentiment. And here, you have to catch this wave and avoid entering the market at times when only market makers are active there. Personally, I try to keep track of the most important macroeconomic events, such as the main one, of course, is the Federal Reserve meeting. Monetary policy issues are something the entire financial world watches very closely. The second important piece of news is the monthly unemployment report, which directly affects the outcome of the Fed meeting. Right now, OPEC meetings and certain key events, let's say political ones, are also very relevant. My main task is, first and foremost, to properly allocate resources and manage risks. And if the market is stagnant for 2 or 3 days, say, before a rate decision, I also reduce the volume and number of trades. The second category is corporate news. Of course, for proper long-term investing, you need to be able to thoroughly understand the key performance indicators of a company, know what revenue, net and gross profit, and book value are, and also pay a great deal of attention to various ratios such as ROI or PE. In fact, studying these topics is not that difficult. There's quite a bit of literature written on this subject. Now let's move directly to the types of news that affect the company's operations themselves. These are corporate news. The first and most important type of news is quarterly reports. They provide a fairly detailed reflection of the company's performance over the reporting period. It's precisely these reports that investors use to assess how much the company is earning or losing. Guidance, or the company's own profit forecast, reflects their outlook for the company's future. So this indicator also needs to be taken into account when evaluating a stock's prospects. FDA approval is the most powerful news for stocks in the biotechnology sector. The point is that every company developing a drug is required to obtain approval from the regulatory body, the Food and Drug Association. And if, for any reason, a company is denied permission to bring a drug to market, it naturally has a very negative impact on their stock price. Interestingly, on the other hand, approval rarely causes a price increase because it's usually already priced in. Mergers and acquisitions, in my opinion, are the most dynamic news for a day trader. It's no secret that larger companies are interested in expanding their business, including by acquiring smaller ones. This is done both to acquire new technologies and simply to increase their market share. As a rule, acquisitions are made with a certain premium. On average, This figure ranges between 20 and 30%. So morning gaps in the stocks of acquired companies are quite a common occurrence. After all, many companies don't want to sell, think the price is too low, or simply want to remain independent. Very often, the antitrust regulator also steps in and blocks these deals. Essentially, the room for speculation here is simply enormous. That's why it's so important to stay up to date with all the latest news in the field of mergers and acquisitions. News from real life, so to speak, is another very important area. Many traders remember the situation with the Ebola or Zika virus outbreaks. Naturally, all the companies involved in developing vaccines for these diseases, or, say, producing protective equipment, saw their stocks move by dozens of percent. The market is constantly living off this news and digesting it. It's very important to spot these trends in the market and be part of these events. Presentations of new products or management reshuffles in a company also often escape our attention. But that's a whole different story. This approach is extremely interesting and dynamic. It would seem that you could just follow the market, go with the flow, and make money simply by writing the news. But it's not that simple. I'll try to share my perspective on how to read the news correctly by simply listing the pros and cons. Let's start with the advantages. The main feature of this concept is that you're always in the thick of things. If you remember, we have more than 8,500 instruments being traded, and every day there is some news coming out. That's why, potentially, you can always find yourself in a stock where there's both volume and volatility. After all, it's precisely when news comes out that there's a chance a big player might start making mistakes. This is exactly how inefficiencies appear, which open up opportunities for traders of any level to make money. Third, you gain instant experience. After all, you could just buy some stock, hold it for half a year or even longer, and nothing might happen. A day trader gains experience throughout the entire trading day. The ability to read news, so to speak, between the lines. That's also a skill that comes with experience. Analyze and compare the events that have happened in the company over the past few years. And you will definitely notice those very inefficiencies when many people are caught off guard by an event that, for example, you were prepared for. And finally, probably the main advantage is that this kind of trading, news-based trading, gives you a huge rush. You get those very emotions, and a good result gives you complete satisfaction from the work you've done. Now let's talk a bit about the downsides. The reaction to news can be unpredictable because what is good news for some market participants isn't necessarily good news for others. So if people are buying on good news, I'll try to do the same. If people are selling on good news, then I'll join in on that trend. That's what trader flexibility is all about. The wise saying, "Buy the rumors, sell the news," hasn't gone anywhere either. Break time equals 0.5s/. That's precisely why it's very important to carefully look at the prevailing trend in the stock before the significant event comes out. Unfortunately, the information media industry is so bloated these days that it's often really hard to find truly useful and necessary information. Leaks, false information, rumors. These are the things that will push you to make hasty decisions. The speed at which you receive information is also a very important factor. After all, it's no secret that trading algorithms can read the news and make decisions much faster than a human can. And even paid sources don't guarantee that you'll find out about an event in time. And finally, probably the main downside is more of a psychological factor. Very often, traders, believing in good news or just expecting something positive, get too attached to that idea and can't force themselves to close a losing position when the trend has already changed. That's why, once again, risk management comes to our rescue here. Since we've touched a bit on the topic of the media, let's talk about the sources traders use to get their information. Let me tell you this. Right now, Twitter is all you need. All the investment banks and major traders have their accounts there. See you in the next lesson. Bye, everyone.